Hello, and thanks for joining us for this Calidus Resources presentation. I'm Paul Armstrong from Reed Corporate. Calidus is ramping up production at its Warrawoona Gold Project in the Pilbara. Calidus Managing Director Dave Reeves and his team have overcome some big challenges in building this project, not least of all COVID, labour shortages, and of course cost inflation across the industry. Calidus has published an updated presentation today which is available on the ASX platform, and that will be part of today's presentation. Dave will now give a short presentation, and then he's happy to take questions. If you'd like to ask a question, please click on the Q&A tab on the side of your screen, and we will endeavour to put as many of those questions as we can to Dave once he's finished his presentation. Over to you, Dave.
Thanks very much, Paul, and good morning or good afternoon, everyone, and thank you for joining us on this webinar. It's going to be a pretty short and sweet webinar. I think the slides speak for themselves in general, and really an opportunity for Q&A from everyone. So without further ado, let's tackle the three main areas we've been looking at, which is grade. So in November, we saw a very good correlation between predicted grade at a 10% dilution to mill feed grade. And then we also, I suppose the point on this slide that stands out is we did a trial of 2 days of low grade and then 2 days of what we call our peripheral loads, which average about 0.6 grams. Just batch them through as one to see how they reconciled, not just the main load, and pleased to say that the reconciliation on those was also very good. So all in all, very happy with how we've maintained 10% dilution through November against our grade control model. The next big issue we're looking at is tonnes through the mill. So we milled 164,000 tonnes dry in November. That's 2 million tonnes per annum. Our target is, of course, 200,000 tonnes, which we're aiming to get to in January 2023. How we're doing that, we've got a water bore on site at the moment, drilling 4 water bores that we'll be equipping and slowly introducing that water through December. In addition, we are upgrading the thickener. We're doing a temporary solution through December, which will get us operating with that thickener in January as we do the more permanent final solution. But between those two initiatives, we see ourselves at full run rate in January. We also, at some time in late January, should be intersecting water within the pit, which obviously will only assist moving forwards as well. Just to show you what 40 mils of rain does in 2 hours, we suddenly got a fair bit of water running to the tails dam. And currently, for the first part of December, we have been milling at that 2.4 million tonnes per annum, which shows as soon as we get the water up to the mill can certainly operate. And as I say, 4 water bores going in as we speak, slowly being plumbed in with that thickener. Initial temporary job into a final position during January will see us, eliminating this bottleneck once and for all. Mining, we'll spend a bit more time on. Mining has been a bit of a constraint to date. We were budgeting on 550,000 cubes per month, but we have been looking at the availabilities and labour availabilities, so availabilities of machine and labour availability, and what we believe is actually a sustainable run rate with McMahon and the equipment we've got on site. So we're currently in the process of we're rescheduling the mine, bringing down our budget requirement of 550,000 cubes to 450,000 cubes. We can do this by essentially staging and scheduling the pit in a different way. It's the same pit, just doing it, if you like, a little bit smarter, to even out our strip ratio over the life of mine and take the pressure off the mining fleet. We have had a week already in a row over 45 degrees at Marble Bar. It's very tough on machinery and personnel, and we believe a 450,000 cube per month target is something we need to bake in as realistic. That keeps the mill fed. at our 200,000 tonne a month, reduces cost by $1 million a month from budget, and just spreads out that movement over the life of the mine. We are working with Macmahon's on some initiatives for better labour retention, better availability of that mine plan, and that really is our main focus now. We're pretty confident and comfortable where we are with grade, comfortable where we are with the mill throughput already at 2.4 million tonnes per annum and extra water coming in as we speak. So really our focus is turning to the last piece of the puzzle is making sure we got a sustainable mining rate that delivers that 200,000 tonne per month now that the mill is doing that. So as I say, work in progress over the next couple of months, some new initiatives there to ensure we maintain that 450,000 cubes, but working with Macmahon's very confident that we will see that as a sustainable rate for the years to come. So really that's a quick summary of where we are, pretty much in line of where we expected to be, except slightly ahead of where we are milling just because of that rainfall. By the end of this year with that water then locked in, really pretty happy with how we're set up for 2023. While on this call though, I thought it'd be good to just briefly touch on Blue Spec West drilling as well. Looking a bit further afield than month to month, as we have overcome the operational ramp up challenges. Certainly where we're looking to in the future, very excited with what we've seen out at Blue Spec West so far. Released just 2 holes the other day. The first hole, 41 metres at 2.4 from near surface. Was a brilliant intercept for an area that's got no old workings and no drilling at all from the past. So great job by the exploration team. And we're just looking at one little area at the moment where we've done our first amount of drilling out over 1.5 kilometre strike length. So these are very wide spaced holes, just trying to get a feel for what we are looking at out at Blue Spec West. If we zoom in a bit, there's multiple shear zones and alteration zones stacking up together, which is great. You can really start to get some critical mass in tonnes and ounces per vertical metre when you see something like this. Really solid grade through that 41 at 2.4. It wasn't carried by 1 metre at 30 grams. It was very consistent grade through that, which is good. Drilled a hole beneath it. We're seeing the same alterations. So we think we've got the plunge component or the dip component sorted out. And we're just waiting on more results to come in. All being well, we should get one more announcement out on this before Christmas, if not early in the new year. Up on site, I was up on site just a week ago, walking across the ground with our exploration geos, and certainly, it's quite impressive to see on the ground. And fingers crossed that we see some more of these results coming through. So as I said, pretty short and sweet, and really here to take any questions because, as I say, I think the slides speak for themselves. Tick on the grade. Water's almost complete, and really just focusing on sustainability and mining. So Paul, if there are any queries, let's get into them, shall we?
There are some questions, Dave. A couple of these you've touched on, but let's just put them to you anyway, and you can perhaps elaborate. The first question was on the water. Will the water issue be solved once and for all? Is there any issue finding water?
No, so we did exploration drilling during November. That's allowed us to bring in the water rig for these 4 bores. That together with the thickener work sees water solved. We are actually going to do more work on water just to bring in more redundancy for backup, just in case. The network's ongoing in the background with some dualisation of pipelines over the coming months. But for the short term, water, we believe by end of December is sorted.
Moving on to a slightly different flavour, Dave, M&A. Any thoughts of doing acquisitions in the next couple of years, looking at stranded assets and the like?
Look, absolutely in the area, stranded assets make sense. Over the next couple of years, yes, absolutely. In the short term, definitely not. Focus 100% on getting where we need to be on the mine, looking at our own exploration, spinning out lithium. We've got a lot on our plate, but number one has been all focus on the mine.
Moving to the financials, Dave, a viewer has asked how the current production is impacting your financial position. Is Calidus breaking even, etc.? Obviously, the gold price is getting better. And of course, the question, is there likely to be a capital raise?
So pretty well washing the face with the operation to a large degree. There are other costs and some washery development costs on ball fields, airport, interest rates, etc. But certainly no plans on capital raise in the near term at all.
And what about repayments?
Yeah, so we're working closely with the bank on that. They've been very supportive and flexible to date, understand that we've been working through these issues, and I think they see clear line of sight as well into where we're heading.
Analyst Paul Howard, I assume it's Paul Howard of Analyst fame, says, "Hi Dave, would you say November was a good indicator for overall December quarter production?"
Oh, Paul, I love Paul and his questions. Go straight to the heart of it. Well, we've sort of put out where we were in October. You can see roughly where we were in November. Tonnes will be up more so in December through the mill than we saw in November. As I said, we have dried up our blasted stocks with mining that we're working on recovering, so we are a bit hand to mouth on the grade side. So we've just got to push on that and make sure we're feeding what we want to feed. And we're working with McMahon's to make sure they catch back up to where they should be.
I suspect this is from a shareholder, Dave, given that he uses the term we. Are we still a 90,000 ounce per annum project?
Yeah, so obviously we were never stable at 90,000. That was an average from between 80 and 110,000 ounces, depending where we are, be it underground, what grades we're feeding, etc. So over the life of the mine, at the moment, the life of the mine is obviously reduced by around 10% ounce-wise between our resource model and grade control that we've talked about before. But it will be the same ounces over the same period of time. So depending on schedules, etc., it'll be the same ounces, but 10% less in mine life years, if you like.
Another viewer asks, Dave, clearly Blue Spec has good potential. Can you take us through the timeline, please?
Yeah, good question. Such early days. Let's get these results in over the next few weeks, see what we're looking at. We need to understand a bit more on the geology and structure, I think, which will be a few diamond holes. But we've already started talking internally about what do we need to do for mining proposals, permits, because obviously, there's first hole, 2.5 gram. It looks like there's a reasonable tenor of gold down there. And any 0.9 to 1 gram, which we're currently treating material we can displace with that, is hugely beneficial to us. So we'll obviously go very hard. Obviously, Blue Spec itself, we're looking at putting through a sulfide plant, but certainly what we're drilling up the top is all oxide. So, we need to do the met test work, but if it's heavily oxidized, we believe that should go through the Warrawoona CIL. So it really is about how quickly can we define it and how quickly can we get it permitted. And a lot of that depends on what we find. We've done heritage clearance. Next, we'll move on with environmental already, and we'll start to work through that in parallel with the exploration.
Moving to lithium, Dave. Where is Calidus at with its lithium ambitions?
Yeah, so still engaged with advisors on how best to demerge and look forward to providing a more solid update next quarter on where we are. Still in discussions to try and bulk up that portfolio. There's a few complexities in structuring with ASX that we're working through and others. So haven't done a lot on it. Again, main focus obviously has been on the mine, and we're looking forward to that changing as that progresses into steady state next year, and we can free up time to do some of these other things that we've been wanting to do, which obviously includes the demerger of lithium and letting that be released onto the market.
Another question, Dave. Where should we expect Calidus to be by the middle of next year?
Very different position where we are today. Certainly expect us to be a solid, steady state producer, making good cash per quarter. Paid down our debt. Started paying that down. Have exploration rigs turning. Hopefully have demerged lithium by then. It's just a lot more settled than where we are at the moment.
And one more question that's come in, Dave, on the acquisition front. Do you believe there's scope for consolidation of gold assets in the Pilbara?
Oh, absolutely. We know numerous deposits around us that would make sense to consolidate. Consolidation really works when it's within trucking distance of a mill. And so there's, the Pilbara is still quite a large area, not well serviced by roads. So it does limit it to some degree, but certainly in the East Pilbara, we are the only operating mill. So it really does open up a lot of avenues there.
Dave, that's all the questions we have. I think you've addressed all the issues that have been put to us. Thanks very much for joining us. Thanks to everyone who has watched and taken part in the webinar. And Dave, will speak to you in the new year.
Yeah, thanks very much, Paul, and thanks everyone for tuning in. I wish you all a very safe and merry festive period and look forward to catching up next year.
Thanks, Dave.
Cheers.